Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. It's Andrew with the Market Mindset. I wanted to catch up with Black Mountain Gold because I saw, it's an older press release, but someone mentioned to take a peek. Back in September, at the end of September, the company announced they'd bought the Banio Potash Project in Gabon. And I thought that was quite curious, and partly because if you look at one of the directors, Farhad Abbasov, you can see he was president and CEO of Allana Potash Corp, which sold to Israel Chemicals for about 170 million. He was also the co-founder of Potash One, which sold to KNS for 430 million, amongst other things. And if you also remember, this is the team that was at Millennial Lithium, which sold to Lithium Americas for almost 500 million. So I wanted to reach out to Farhad Abbasov, myself, and ask them what's going on with this acquisition. What's the plan here? So I look forward to this conversation. I hope everyone is doing well. So welcome, everyone. Good evening in Dubai. Farhad, how are you doing?
Very well. Thank you, Andrew. Good to see you. How's it going?
Everything's going really well. Looking forward to a nice weekend. But I wanted to reach out to you guys because you're called Black Mountain Gold, but then someone said, "Hey, take a look back in September. They did a purchase here. So you did a purchase of the Banio Potash property." I thought that was pretty curious, especially with your background and the team's background. What can you say, or what what can we get out of you today about this purchase?
Yeah. So no, Andrew, thanks a lot. Yeah. Look, it was really an exciting project. As you know, yes, you're absolutely right. The company's called Black Mountain Gold because we still have a very exciting gold project there from Arizona as well. But we've been looking for an interesting project in certain commodities since we sold Millennial Lithium a few months back. So one of the commodities that we're really interested in was potash, primarily because of very dynamic, very positive, I would say, supply demand dynamics. So we believe that potash is going to be a very interesting commodity for the next 3 to 5 years because of a number of issues, and we'll talk about it. And we're keenly looking for something interesting. So this project came across our desk in the early summer, and we started doing very detailed due diligence on this project. And as you mentioned already, we have pretty solid experience in potash sector in general. So we have the right team, so we could do a lot of the due diligence ourselves, but we also engage a third party because it's in a jurisdiction we're not familiar with. So it's a very, very exciting project. First of all, let me start with the location of the project so that our listeners understand where it is. So it's on the western coast of Africa in a country called Gabon. Gabon is probably one of the most business-friendly jurisdictions on the continent. And it has very strong mining laws as well. And it is an oil and gas country. So it's pretty wealthy. It's, I think, the third GDP per capita in Africa. It's a very stable country. And what is very important about this project is that this is actually a very well-known potash basin in that part of Africa. And that's what attracted our attention in the first place, Andrew. And even more importantly, this project was already drilled. So we know exactly what is in there, although we can't talk about the resource estimate yet, but we know that there is plenty of potash, and that's what really got us all excited and psyched, and went into it in full force. And in the end, we struck a deal, which is a typical earn-in agreement, whereas we'll earn up to 100% of the project over the next 3-4 years, all the payments in cash and shares based on milestones. So it is a very, very interesting project.
To me, I'm a big fan of all the fertilizer sector. We've looked at some potash and some other types of companies as well, but some phosphate as well as potash. And luckily, our viewers know, because we've had some guests on, like how important Canada is in the potash space with Nutrien, of course, but how much it supplies to the rest of the world in fertilizer. But we're also seeing, because of the Ukraine-Russia conflict, that there's a massive issue with ammonia, but also potash from specifically Russia and Ukraine, that has caused a very big issue, say on the European continent, Africa continent. So to me, it almost seems like this could fit a very necessary supply chain issue, or solve a supply chain issue in theory fairly well.
Absolutely, Andrew. So let me tell a little bit about what's been going on, and you already mentioned the key kind of factors, but maybe just to flesh it out. First of all, we stick with the fertilizer story. As you know, we just I think last week we hit 8 billion people now on Earth. So congratulations to everyone.
Yeah, we did it.
So we need to feed all these people.
Yes.
So we got to come up with all these fertilizers, and I think this trajectory in terms of growth for both phosphate, potash, and some other fertilizers has been in place for the last I would say decade or so, and that's exactly what we like. Overall theme and overall trend that is in place. But as you said, the whole trend, or the whole dynamics, has been even further enhanced, or in certain cases constrained, by the geopolitical upheavals in Europe, specifically by the invasion of Russia of Ukraine. Now, what's happened there is that Russia and Belarus, as you know, is an allied country of Russia. They produce almost 40% of world's supply of potash. So that potash not completely taken out of the circulation, so to speak, out of supply chain, but most of it is actually quite constrained because of sanctions and so forth. So what has been happening is that the demand is for about 75 to 80 million tons a year, and now almost 25 million of it is under big question mark because it comes from Russia and Belarus. Now, some of it, as I said, it still comes out, but quite a bit of it is still kind of stuck in the ports in both of those countries. Now that puts an immense upward pressure on the price, but also, of course, the demand is still there. Demand is growing. So we think that all of these factors actually create a very interesting environment. Whereas the potash, we believe, is going to be a very strong commodity in the next few years. Now, having said that, Andrew, we're always going to projects that have low cost structure. So we're not going to jump into any potash project just because the potash is going to be hot or anything of that sort. We always believe that, we go through all these cycles, it's very difficult to time them. So want to make sure that if we get caught in a down cycle, we have actually a very low cost structure in the project. And that's where this project also stands out. Whereas, we believe that this is going to be one of those projects that can produce at a very low cost for a number of reasons. One, it is, as I said, it's a massive project. They've been 3 drill holes on one cluster in the project, and about I think between 2017 and 2018, relatively new drill holes. They were specifically drilled for potash, so they intersected very rich carnallite and sylvanite potash horizons, starting at the depth of about 230 meters, going down to about 500 meters. So relatively shallow depths. And in addition to that, I think it was in the 50s and 60s, there were also oil and gas drill holes sunk there about 20 kilometers away from the recent cluster of the drill holes. And they also intersected potash. So that is very important. So we know that this basin is quite large, and these seams were very, very thick, between 5 to 12 meters, both for sylvanite and carnallite. Now, we believe, because of the environment, because of a relatively cheap gas availability and so forth, that we can actually do solution mining here. Now, solution mining, as you know, doesn't require really, big infrastructure and so forth compared to let's say typical underground mines like in Canada and some other parts of Europe, in Belarus, Germany, and Russia. So that will keep both our capex and operating costs quite low. So the previous operator, the ones who actually, the previous owner, I should say, they estimated certain costs here. They believe that it's going to be around $100 per ton. We think it is quite feasible, maybe a little bit over $100 to be more realistic here. And the capex is also going to be quite feasible. It's not going to be billions of dollars, because we're going to start small and then, of course, scale it up. So that is another very important, advantage that this project has. And Andrew, one other thing that I want to mention here that a lot of people may or may not realize when it comes to potash, the location of your producer or production center is absolutely critical to your cost structure. So that is very important, and that's why it is critical to look where you're actually located. And that's how we've chosen our previous potash projects, and that's exactly what we looked at here as well. And in this case, as I mentioned earlier, it is in Gabon, it's the west coast of Africa. So this is going to be one of the nearest producers that could export its potash to Brazil. Brazil is the largest importing nation, potash importing nation, that is. They import, I think, close to 12, 13 million tons a year. And then if you look at the map, and in the presentation we have that, and then maybe you can show that to listeners later on. And actually, if you look at the distance to both India and China, the remaining large, potash importing nations, again, very close to them, probably one of the nearest potential producers down the road. So when you look at all these factors, combined with the fact that this is in a very stable jurisdiction, and this has already been proven, this is not obviously a greenfield project at all. We really love the project, and the people who did this work actually, they've done really very thorough work. So we believe in what they've done. We've also engaged a third party, one of the well-known companies, consulting firms out of Germany called the Urkusplan. They've been in business for close to now 80 years, and they've been doing a lot of potash projects worldwide in Europe, both in terms of solution mining, underground mining, and so forth. So they have already visited the site, and they've already started working on what we call, initial 43101 technical report that we'll need to file with Exchange. So things are already in motion.
Yes, and I'm glad, because I was going to ask you, because you're the co-founder of Potash One, if there's any similarities, and I think you've given us some, but are there any kind of anecdotal stories, or is there anything from what you've seen of any of the geology or anything of that nature that you could say there are some similarities? Because having been involved in a potash company specifically and having sold it as well, that's invaluable to understand the process of a specific commodity. You've also done it in other commodities, but it is very interesting that you've done it specifically with potash and looking at it again.
No, Andrew, you're right. You hit the nail on the head that, both potash projects that we've done in the past, they were both focused on solution mining. So we've gained tremendous expertise in terms of how solution mining in different environments with different geology actually works. The most recent project was actually in East Africa. We had a project a company called Allana Potash. This was in Ethiopia. And you're right, I was also involved with Potash One, which was in Saskatchewan. So two different geologies and two different geographies, and they were quite different, but both were actually employing solution mining methodology. So to give you an example, so this one, the one that we have in Gabon, is probably closer to Saskatchewan in terms of the entire processing route. Meaning, for example, in Ethiopia, we had a very dry environment. So we'd use solution mining. We would basically, dissolve potash underground. You drill into it, you pump water, you dissolve it, and then you pump it back up to the surface. But we would also put the brine that would come back up to the surface in solar evaporation ponds, because basically the environment, the climate allowed that. So we would basically save a lot on energy costs because solar evaporation ponds. Now in Saskatchewan, obviously better than me, the climate wouldn't let us do that. So we had to use thermal evaporators. So basically the same idea, but you would power the plant with obviously whatever energy you had access to. In that case, we're looking at gas. In this case, we'll also look at gas in Gabon. So you would evaporate water. You would evaporate brine that comes back to the surface in thermal evaporators. So that's a major difference. Now, major difference between, let's say, Ethiopia and Gabon, but similar to what we had in Saskatchewan. Now, at the same time, in Saskatchewan, we had to drill much deeper than in Gabon. So the cost, again, would be a little bit higher. So that was a little bit different. Then again, if geology was different as well. So in Saskatchewan, it was mostly sylvanite, the higher grade. Here, sylvanite is a little bit thinner compared to carnallite, but again, enough to warrant a very cost-effective production. So we know solution mining very well, and frankly, whenever we look at potash, if it's not solution mining amenable, we try to stay away.
Yeah.
Primarily because the capex will be tremendous. Even for smaller scale production, we'll be looking at $1 billion, if not several $1 billion. And for a junior mining company, that is not something that we want to really tackle. So we want to really stick with something that makes sense. And I want to add one thing, Andrew, here that we've basically sold both previous companies. We started with both companies with a view that we can actually build them, but we knew that if we develop them right, we'll get traction with a potential buyer. So it happened in both cases. With Potash One, it was sold to a German company called K+S. It's a large producer out of Germany. And in case of Allana, the same thing. We basically finished the feasibility study. We secured a mining permit, and then we got an offer from an Israeli company called ICL, also a large producer out of Israel, and we sold the company to them. Now, here we want to develop a project on the same dual track basis. One, to make sure we can actually develop this all the way through construction, all the way to production, because the capex is actually, something that is reasonable. We can handle it. But at the same time, make sure that we do everything right, and so that we prove up a very large resource with all the mining permits in place and the feasibility that is stellar, so that we can attract the actual potential acquisitor as well. So we think, this dual track approach works all the time. In fact, we did the exact same thing with our lithium project, Millennial Lithium. Yep. The same thing, we could actually build it, but at the same time, we got 3 bidders. And we thought that, we got actually pretty good value for the project because of that situation. And so we want to use the same model, Andrew, here and replicate the same success.
And that's what's so critical when you have a management team that's done it, and especially in the commodity you're in, and also other ones, is that you'll know exactly what companies want to see, like how they want it laid out, how it's packaged, because they don't want to have to come in and buy something, even if it's a great resource, and go, we have to redo this, and this, and restructure Absolutely. This. So having that is invaluable in the process. And also, you kind of highlighted that there's a lot of data already there. So you've got a lot of data. How far along are you, or what's the next steps? Like if someone's saying, okay, well, because it is solution mining too, this probably cuts down timeframes a little bit. What's the speed, or the next steps, and what kind of timeframes if someone's looking at?
Sure. Yeah. So Andrew, just to be clear, that the previous operator actually put out a resource estimate. It was JORC compliant, but not 43101 compliant. The exchange, the venture, has not allowed us to actually put in our news release, but it is out there. So, okay, yeah. I'm not going to talk about it, but, people can easily look it up and see what that number is. So it's a very large resource based on that, on those 3 drill holes already. So we know what is there. We know exactly where it is, and we know potentially the size of it. So the plan is now to go back and at least confirm the initial estimate. And it's a very large, again, resource estimate. So we want to do that. So the first step would be actually to go and drill. We'll drill a few holes just to make sure that we can, confirm at least that. But again, as I mentioned, that resource estimate the previous owner came up with was based just on 3 holes.
Yeah.
And we know that about 20 kilometers away, in the 50s and 60s, they drilled for oil as well. And they also found almost exact same horizon. So this is very continuous and it's quite large. So we think it's going to have a very, very interesting size of the resource and with decent grade as well. So that will be step number 1 for us. Basically, the first drill phase, starting as soon as the deal is approved by the exchange, hopefully before the year is over. And then the next step for us will be to, do some further work, seismic work, et cetera, just to make sure that we understand the geology quite well. And then most likely we'll do the second phase of drilling, just to bring the inferred resource to M&I to measure an indicated level. And then after that, hopefully in the second half of the next year, we're really confident about geology, then we'll immediately go for a preliminary economic assessment, Andrew. So that is the plan. It's a very aggressive, work plan, but we think, we can accomplish that program. As I said, we got the right people on board and management, we know this stuff very well. Now, if that works, frankly, the way that we've always approached our projects, if the PEA is done properly, meaning that, that means drilling has been done, really well, then instead of doing the pre-fees, et cetera, we'll go straight into feasibility study.
Okay,
so good. That should cut down the entire development timelines considerably down, probably to about 2 years before we can finish the feasibility study. Let's say by the end of 2024.
That's great to have those kind of checkpoints and milestones that we can kind of base things off of. As far as cash on hand, how far can you guys get? Like, how far down the road can you get before having to do another financing, or before looking? Is it, kind of get this first stage done, prove up, and put out 43-101, and then kind of look from there, or what's the steps there?
Yeah, Andrew, we're in a fortunate situation that we don't need to raise any capital right away. Black Mountain already has over $3 million in the coffers, so we'll use that cash to do the first phase of drilling. And then we also have some warrants. So if the stock does well, of course, we can always convert those warrants and bring in some more cash. And if the results are very good and the market really likes it and the stock reacts appropriately, we'll look at our opportunities. If there's a demand for stock, if there's a demand in the market, we'll raise some capital. We're not going to obviously wait until we run out of cash. But I think we have plenty of cash for the next 6 to 12 months. So we don't have to really rush out there. But we think once the results start flowing in, we'll probably get more demand. I mean, once we made the first announcement that we're getting into this project, we already got a lot of interest from different corners, both in Canada and general North America, but also from Europe and some parts of Africa as well. So we think, there will be no trouble for us to raise capital. And again, people have seen, drill results in the previous drill results. They know that we're getting involved with something that is real, that is already in place. So all we need to do is really prove the quality and the size of this resource, so that we can actually take to the next step and just really work on the economic side of it, economic feasibility of it. So it's a long winded answer to your question, but for the next 6 to 8 months, we're all good with cash. But if there's an opportunity, of course, we'll raise some more.
No, it's perfect. I mean, it's we're big fans of fertilizer. We understand the story over here. I think more and more the general public are starting to come around. And I mean, they can look, you can reach out to me as well, but they can look on your website to see the involvement the team has had specifically in potash and creating value there. Given the current environment, you're going to have some new numbers which can reconfirm what was allowed out there in the past. I think the market's coming along. I mean, they've really starting to pay attention to fertilizer, because it's some of these like staples in life that we're starting to see are so critical. Whether it's because of the war in Ukraine, inflation, I think people are starting to realize some of these bare bones necessities are absolutely critical, and getting fertilizer to the market is key. And having a team that's done it a couple times before, they know the step-by-step process. You've got cash, you've got infrastructure close to the project, you've got a port close to the project. If you can deliver and hit milestones, this looks very, very promising. I think that's what I'm seeing.
Yeah, right, no, you're right. Look, I didn't talk about infrastructure much, but I'm glad you mentioned it. So not only is it close to port, and it has good infrastructure, but also the camp is already in place, so we don't have to build a camp from scratch, and that is very important. We have even drill rigs on site. The drill cores are on site. The camp infrastructure is on site. That's why when I said as soon as the drill is approved, the deal is approved, actually we're going to start drilling. It's not that we'll have to mobilize anything. All we need is actually to get people there, and also in this part of Gabon, there's actually a good pool of skilled labor, because again, these people have been drilling, so they're just obviously not doing the work right now on site. So we'll just re-engage them. That's also very important, as in some parts of the continent. And one other thing that you mentioned that I think early as well. When you look at these projects, you got to look at the whole complex of factors, not only the project itself, because you may have a stellar project, Andrew, but you may have it in the wrong place, meaning either jurisdictionally or geographically, or politically, and so forth, where you cannot attract capital from almost any corner, or you're stuck with one specific, group of investors or strategics. Here, we have a lot of options, and that is very important, because the Chinese companies are very active in Gabon. Indians are very active. Obviously, this is very close to Brazil. Brazilians are interested in this as well. And I'm not even talking about typical Western capital market investors.
Yes.
So it is very important. And there are the large companies, both in oil and gas and mining sectors operating in Gabon as well. So all of these are very important for companies like ours, because, in most cases, as I mentioned, we bring it to the certain point at where we start looking for strategics. So you may have it in a place where you have, again, as I said, from technical perspective, pretty decent project, but we really cannot either finance it or do an M&A. So here we think, that dual track development, option is actually open to us, and that's why we got involved with this. So that's one of the key questions we as a management look at. Can we answer that? Can we actually deliver on those two things? If one of them is absent, Andrew, we don't want to paint ourselves at the corner, right? We don't want to be in a situation where, we can't raise capital because there's no strategic to buy us out, or vice versa. So we think, pushing the project on both parallel tracks is absolutely critical to the success of any of these commodity projects, but specifically in niche commodities like lithium, like potash, etc. But even in lithium, lithium is hot now. When we were involved with lithium, or got involved, nobody was putting any penny in it. Yeah. So things change on a dime. So that's why I think it's important to look at the worst case scenario. And when we're looking at this project, we'll look at, the potash price right now in Brazil, for example, is about $700, $750 per ton. This can produce at probably between $100 and $150 per ton. So the margins are enormous, but I'm not looking at the current price, Andrew. I always look at a worst case scenario. So if that plummets, if that 750 gets half, can we still make this work? Yes. So then we actually proceed with the project. And I think that's what is really attractive about this project, that it's in the right jurisdiction, right infrastructure, right project, and it's stable, and it's open to Western business. It's open to all business, I should say, in that regard. And the country actually did a great job on the mining side as well. About 7-8 years ago, they overhauled the mining law. So the mining law is now very similar to one of the advanced mining jurisdictions, like be it Canada or Australia. So that is very important for us too, because we don't want to get bogged down in a country that changes the story, that their laws and all kinds of the framework all the time. It's very difficult to operate in those environments. So taking all of these things into consideration, we think this is going to be a very, very successful project.
And I think with the people will appreciate too the aggressive timeline, really going after it. I mean, that's in a challenging market. They'll see you guys have produced before, you've done it before, you've set yourself up. We'll just have to watch to see what the steps are, and we're looking forward to seeing how things progress. I certainly I'm not a patient person, so I'm looking forward to seeing results come out.
There's no magic. It's all about working your tail off. So that's all it is. Yeah, we got to put our nose to the grind and work.
Perfect. Well, thanks.
That's where you create magic.
Excellent. Well, I really appreciate it. I'm really glad that we could get this out, and we caught this. We saw that you guys have bought this because it's a big opportunity, and I'm really looking forward to seeing what comes out next in the next steps.
Thanks so much, Andrew.
All the best.
Pleasure.
Take care.
Take care.